This module examines the supply and demand for precious metals. These are physical commodities, and understanding the forces and drivers of supply and demand in the physical market is essential for understanding the derivatives markets. We'll look at gold, silver, platinum, and palladium, and we'll focus first on the supply side of the market. For all four metals, new supply comes to the market from mining production and from recycling. Mining product accounts for between 70 and 85% of the total new supply, depending on the metal, with recycled material accounting for the remainder. The proportion fluctuates with time, reflecting factors such as the changing cost of production, reclamation values, and the economic outlook. For gold, supply from these two sources amounts to around 120 million troy ounces per year, equivalent to around 3,700 metric tons. This production has a value in the order of $150 billion, which represents by far the highest value of production in the precious metals space. Gold mine production comes from countries throughout the world. Chinese mine production has risen considerably in recent years, and now China is the world's largest producer, accounting for around 16% of global output. In contrast, South Africa, which used to be the largest producer, has seen declining output in recent years. Australia, Russia, the USA, Canada, Mexico, Peru, and Ghana also produce significant quantities. Silver has the largest supply volumes of the four metals at in excess of 30,000 metric tons per annum. This has a value in the order of $17 billion. As with gold, Chinese mine production of silver has increased substantially in recent years, although Mexico remains the largest source of silver mine supply. Platinum and palladium have lower production volumes. South Africa and Russia are the most significant producers of mined metal. For platinum, South African production dominates the market, representing around 2/3 of global mining output. However, production from mines and recycling is not the only source of the metal supply to the market. Metal is formed into bars and stored in vaults. The stock of stored metal in these vaults that has accumulated over many years is also available as a supply to the market. There are no reliable estimates of the amount of precious metal stored in vaults. Some is owned by central banks, some is owned by investment funds, and some is owned by individual and corporate investors and intermediaries. Investment demand is a significant element in the market for precious metals and is important for establishing market prices. However, investment transactions usually represent the transfer of ownership of stored material. This brings valuable liquidity to the market, but has little impact on the overall supply and demand. Taken as a whole, investors can be seen as either net buyers of metal and therefore a source of demand, or net sellers of metal and therefore a source of supply. Gold is the most widely held investment commodity. As well as private investments in gold, central banks hold a significant amount of their reserves in gold. Silver is widely used in the production of coins, with the USA and Canada being the largest producers. It is estimated that the global use of silver for coinage accounts for around 14% of annual silver production. Also on the demand side, all four metals have a wide range of industrial uses, reflecting their physical properties. All are used in the electronic sector. Gold is used in medical and dental applications. Silver has seen increased use in photovoltaic cells. Silver is used in photographic production, but this has decreased sharply with the advent of digital photography. A major use of platinum and palladium is in the creation of vehicle emission control devices. Precious metals are also widely used in the manufacture of jewelry. Jewelry use is primarily physical use of gold, with the amount used equating to over 2/3 of annual production. The use of silver and platinum for jewelry is relatively lower, at just under 1/3 of annual production. Palladium is used in jewelry, but the amount is much less significant. In conclusion, thousands of tons of precious metals are produced each year from mining operations, adding to the stock of metal available. These metals are used in industry and in jewelry manufacture, from where they can be recycled back into the market. Precious metal is also held in store as an investment and as part of countries' official reserves. The combination of all these factors creates an active global market for precious metal.